Alright guys, it's a rainy day here in Northampton. Saturday, it's windy, it's raining. But hey ho, we'll keep it on the positive. So, I just want to talk about my trading 212 account. A bit like the weather, it's not gone smoothly. So, I've got about £450 in there now. And we're in week 2. So, it's still early doors. But one of the things I want to say is I transferred the money originally, some of it I put in through my bank account, then I thought I'll move some of my savings in there. But the problem with the savings is it doesn't put a reference number. So my money got transferred and then 212 didn't know it was my money. And it seems like a few people have had this type of issue. You've then got to find the transfer numbers, which you'll get from your bank statements, but my bank statement isn't due for another month, so I had to trigger a fresh bank statement from my bank to actually give it to 212 to say, these are the transfer numbers, this is the amount, please give me my money, please. So, although it's been 2 weeks trading, in reality it's about £100 for the first week, and the second week was getting stuff into their fund and it's not really moved yet. So it's slow, but at the same time, if you use the reference code that's at the bottom here, or you use the reference, well, if you use the reference code, you will get free shares when you first sign up. I think it's up to the value of £100. So the reason it's relevant is when I joined up, I got some shares worth £10.50. So when I show the percentage at 8.5% or whatever it is at the minute, bear in mind the first £10.50 of the money that's showing as profit was that share. So I've only made about £4.50 to £6, depending on the day, because obviously it's the weekend now, so they've stopped trading. But the point being is, it's still like £4 for a week's work, really. My portfolio I've split just to give you a bit of the logic in my madness. I've got a managed fund separately with Vanguard directly, so it's not in the trading 212 account. That one's a mixed fund and is managed purely by Vanguard and generates roughly 13% interest per year. Inside the 212, you'll see I've got two sort of setups. There's one where there's like a mixed portfolio of Vanguard funds mainly, and that one's to see how that trades against the other Vanguard fund. So it's a bit mixed because I've got Japan in there, and there's another one, everything but Japan in Asia. So, but they're all different Vanguard funds just to test the waters. Then I've got another fund set up, which is for dividends. Yeah, predominantly dividends. There'll be the odd share that might skyrocket in there, or maybe not, or completely crash and burn. But the concept being is, with dividends, you get them periodically. So for example, I pick stocks that I know are going to be consistent. So Johnson & Johnson, Kimberly-Clark, Eli Lilly. Eli Lilly manufactures things like insulin. They do the insulin for diabetes and stuff like that. So I took stuff that I know is fairly stable. You know, you want Coca-Cola, you want Pepsi. They're all ones that consistently deliver. They're not going to break the bank or do something amazing, but every now and again you'll get something that will jump. So I look at those and I thought, okay, I'll get a spread in those and they'll just compound, because the other thing with dividends, they don't all come out at the same time. So if you imagine there's a real estate one there, it pays monthly. There's others that will pay quarterly, others that will pay annually, others will pay biannually. But every time they do that, there's like a little bit of money they give to you which you can reinvest. So the point being is I just keep reinvesting this money. So the concept of that is I just want to show different funds, and we can see which ones are performing best out of all of them. There is other things I'm looking at as well, which will make sense, but I'm not giving anybody financial advice. But it's already been sort of proven with two this week that I didn't have, because my money was not where it should have been. I didn't invest in them. One was Pfizer. Pfizer has got a alleged cancer drug approved by the FDA. I think the stock's jumped 7%. Nike stock has also jumped 7%. I'm looking at, say, Nike, the old Budweiser group, and others that may be trying to realign their businesses after taking a hammering down the woke environment. This is why sometimes it's worth looking at undervalued stocks that sometimes they've done to themselves, because they will recover, because people are still drinking beer, for example. So there's a bit of analysis going in there, but I'm quite happy to share some of that stuff, but they're not always going to be right. But I'm just a bit frustrated that two that I did choose both jumped literally within days, because I'd seen a couple of things. I thought Nike, after they upset its customer base, because they did the thing where they moved away from their reps and tried to make themselves more like Apple, which was, for me, just in the dumb view. And then that same guy, if I'm correct, is a German guy, has gone over to Harley Davidson, which is obviously also doing very well at the minute. So ultimately, there will be a bit of information and stuff on there, and I've got to admit, I've got to start focusing on this stuff a bit more, because I've got a bit lazy. So I'm looking forward to doing some of the work on that. I'm going to do the crypto. To be perfectly blunt, I can keep all these inside my ISA window. So I get up to £20,000 a year in the UK for ISAs, which is, what's it? Individual savings account. So if I go crypto, there's a risk of being hammered for tax, because I'm already at the top tax threshold in the UK anyway. So I don't really want the tax man nudging me. I've already had enough problems with my previous employer doing something this year, but I'm not even going to get into that, because that just frustrates me. But the point being is, I've got an ISA window, so I'm probably not going to do too much on crypto, simply because I don't want any tax problems. Because bear in mind, I'm spread across Spain and the UK at the minute. And although they've got bilateral tax agreements and stuff like that, you don't need to throw anything else in the mix that can just cause havoc for your tax. Don't need that headache, guys. So we'll just work on trading 212. The Vanguard fund, I'll just the bigger fund, I'll just give you the percentage if it changes. But I am finding the one managed by Vanguard is running at 13% per annum, and I've been running that for nearly 3 years, I think. And that one's growing quite well. That one's starting to gain momentum, because there's enough in there now that it's starting to churn the money itself. So this account we're working with currently has £460, I think, in it. That will eventually be, I'll see how this month goes, because my son wants a cello for his birthday. But if I can get that to £1,000 at next payday, that gives us a nice couple of zeros to work with, so we can see some movement on there. One of the things I want to say, the reason I'm doing ISAs instead of pension funds is, if this all goes south in the UK, it's much easier for me to extract this than pensions that are locked in forever. Because, I mean, you look at the state pension, I'll probably be dead before it gets claimed. So they do well out of it, I get bugger all. But the reality is, I think that's 67 by the time I get there, after the mess they've just made with the UK economy. they probably push it to 70 or something stupid. So, or it starts becoming non and void. So I have got a company pension as well, just to be aware, and I've started stacking 12.5%. I've got 12.5% going in that annually, and I need to look at the tax on that as well, because I might be able to increase that to stack the pension fund up, the private pension. But anyway, I'll share some of my 2121 stuff with you, because I've now got it on my laptop, so I might do a little video later just showing what I picked and why I picked it. But I just want to share, that's the update for that. Thanks for watching.